The market plunge today isn't the only worry on the minds of investors after officials in Texas confirmed the first case of the Ebola virus diagnosed here in the U.S. So could the fear factor surrounding Ebola hurt the U.S. economy? Steve Leisman takes a look.
We do not believe there's any risk to anyone who was on the flight at that time.
Health officials may say that, but it didn't stop Wall Street today from selling off airline stocks. One index plunged by almost 3% on fears of reduced airline traffic after the announcement of the first Ebola case in the United States.
Given the recent developments of what's happening with the Ebola disease that's now hitting the shores of North America, people are getting obviously concerned about air travel. And investment specialists are trying to get ahead of that trade a little bit and starting to dump out of the airline stocks, thinking that the business may be down. We're going to be watching that. We're also going to be watching other stocks that may be impacted by this. The hospitality industry, for example, they could be impacted as well until the situation clears up.
Health officials insist they can contain the virus in the United States, but the impact on airlines is just one potential fear running through the minds of investors. One study estimated the SARS virus back in 2003 cost the global economy $40 billion. Retail sales in Hong Kong plunged 15% in just a single month at the height of the crisis. Airline travel to Hong Kong fell 77%. Assuming, as many experts do, an outbreak never happens in the U.S. or is contained, the broader impact could come if officials must respond to public fears and restrict travel, or if people voluntarily decide that it's just safer to stay home. But all of that pales against the far deeper and more painful impact in the Western African nations suffering from the Ebola outbreak. Beyond the horrific cost in lives, they pay a dear price in declines in growth, trade, and transit, making it even harder for them to respond with the financial resources needed to fight the deadly disease. The differing responses in the U.S. and in Western African nations highlights the biggest economic issue of all, one the world will be dealing with for decades, and that's the economic inequality that enables a wealthy country to potentially escape the effects of a deadly disease and a poor one to suffer the worst possible misery the virus can mete out. For Nightly Business Report, I'm Steve Leisman.